We're joined now by regulatory lawyer from Clifford Chance, Simon Gleeson. Simon, thanks very much for coming in to see us again on Bloomberg. A lot of these banks already hold a 10% capital, is that right? I mean, for some of them it's not going to make much difference, is it?
Well, it is going to make a difference, really, for that reason. This is being overlaid on top of a lot of other requirements that have already been put there. And the real question is, in the old days, you know, banks had more capital than the regulators said that they needed. We're moving towards a world where the regulators say they need more capital than perhaps they actually do. And the questions are, what does that mean, really, for all of us going forward?
Indeed. So is there likely to be a knock-on effect to the economy in the form of reduced lending or elsewhere?
Well, to some extent there must be. If you say to a bank, you can't lend as much as you could do with that much capital, you're either saying to the banks, go and raise a lot more capital, which makes life more expensive for them and increases the cost of loans for everybody else, or they have to respond by reducing the amount of lending they're doing, which, okay, preserves the cost of loans, but just makes cash harder to get to.
And what scares banks more? Is it these kind of capital rules or these proposed liquidity rules?
Oh, the banks, to be fair, are much more scared about liquidity than they are about capital, just because the liquidity rules are, in fact, much harsher in terms of the impact on their day-to-day business. But really, banks have two issues. One of them is taking risk and the other is creating financial assets. The capital rules really inhibit their ability to create new lending. The liquidity rules really inhibit their ability to do sort of shorter term financing. So to some extent, it's, you know, they're getting both barrels.
Right, okay. Now there has been this idea that it's not all bad for these banks, because the ones that do have to fulfill these requirements will be viewed as safer. Do you think that that argument holds much water?
Well, to some extent it must do. I mean, if you imagine the position of the smallest SIFI, the smallest bank which is declared too big to fail, you'd be surprised if it didn't find it cheaper to raise money than its competitors who are just below that threshold and who are perhaps deemed not too big to fail. I mean, it will be very interesting to see how that plays out in the markets.
Now, of course, the whole point of this was that countries like the US and the UK wanted this to happen because these banks were too big to fail.
Yes.
Are we ever going to know whether these capital requirements are enough unless we were to face another financial crisis and actually test it all out?
Oh, I mean, to be fair, there's no such thing as enough capital. A sufficiently badly managed institution can blow through any amount of capital. And you've got to remember that banks operate with a degree of leverage, which in a manufacturing company or a building company would be regarded as insanely dangerous, and always will be. You know, finance is about money, money is about leverage. There's nothing anybody can do about that, but what it does mean is that once we've set a level of capital requirements that we say this will keep us safe, I mean, there's still another banking crisis out there. There always will be.
And once we've set these particular capital requirements, is that it for a while, or are we just waiting before there's a kind of another round, another Basel, and we look to set requirements on either a larger number of banks or to increase them further?
Well, we're certainly going to have another Basel in terms of expanding the scope, because one of the things I think we know is as a result of these changes, banks will become smaller as providers of finance and other institutions are likely to become larger. This is called the shadow banking system. As banks get smaller, as the shadow banking system gets bigger, Basel is going to have to start asking the big question, which is how can we regulate that shadow banking system? So there's a lot more to come.
Okay, well, we'll leave it there for now, but thank you very much indeed, Simon. Simon Gleeson from Clifford Chance.